is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. FOMC minutes mean nothing these days, seemingly. Everybody's looking for Dow 20,000. Let's take a look at the S&Ps. All right, so we're coming off these daily info highs already this morning, but again, we talked about that particular area on the S&Ps, 2265. This is the continuous contract on the S&Ps, is your target from that bounce around 2236. Just kind of coming off a little bit this morning, but I don't have any confidence that this is something to look at from the short side. I mean, this, they're going to do this Dow 20,000 thing just to do it. So, and we're probably going to have a close above there. So I'm not really interested in shorting this market right now until we get one of these. Everybody chase it, and then it might be time to start looking at a new profile or some new information to start looking at this from any other direction other than long right now. Here's the breadth calculations. Here's our 60-minute. As you can see, this has been pretty daggone lofty here. The daily, again, we closed or crossed back over yesterday. Going to see how some of these stocks open to kind of get a new breadth calculation, but really, throwing everything out the window. I just think the psychological situation we don't have charts this morning. Somebody's saying in the den we don't have charts. Can somebody let me know if they're seeing my charts, and then we have charts. Okay, cool. All right, so that's the drill on the S&Ps. One of the things I've been talking about is you got this long-term profile in the weekly that is below price action. That is just really, really bullish in general. 22.24 is that unfair high, and that coupled with the 22.36, as you can see there, that's kind of your dig in DMZ for longs, if you will. And below there, any type of technical breakage below there is going to possibly mean that we're going to dive all the way back down into 2200 and even lower. But right now, it's not the case. Here we go. Shanghai continues to edge up here. We've talked about this, one of those nice long-term fruitful situations. Looking across the globe, let's take a look at the Nikkei. Here's the situation on the Nikkei, just kind of going up and touching these 19,680s. This is the Nikkei futures, by the way, continuous contract. I'm not as bullish on the Nikkei right now. We are in an area that we've come off here recently, actually today or yesterday and today. But I want to reference the dollar really quick as we're talking about the Nikkei, and we're going to look at the yen. The dollar's come off a little bit here, but I mean, all things considered, really just the long-term trade on the long side is still on, in my opinion. So nothing to really, get concerned about on the long side. No new profiles attempting to appear. It's just kind of the backing and filling, as they say. Let's hit gold. This has been one, we talked about this trade around the 1146 area. This has gone a little bit farther than the 1169 area, which was the original targets. We talked about, again, diving up into the profile, using it as support, the bottom of the unfair low here, the inflection point to pay attention to, especially with that POC buried in it. Really nice trade. We talked about the first targets. Again, there's that 1169. 40. And now if we get a daily close above, you can start looking at that as support. It looks like, and this is our 240s on gold. This has been kind of cool here. Getting kind of this is our 240s kind of changing in a positive navigator and starting to break that stride on the 240s at the same time. So the 1146, there it is. You know, we kind of got a little bit of a leader coming up here on the 240s, but this is, again, those longer term inflection points are the powerful things to lever against. Taking a look at crude really quick. Not super excited and haven't been super excited about being short this. Talked about that weekly unfair high here, 52.26. Was also interesting that relatively wide profile in the dailies, and that POC was at 52.16. So, you know, what is this going to do long term? You know, the dollar coming off, that's really, you know, kind of gold was, in my opinion, showing the signs early, a little bit spring loaded. Dollar comes off, boom, you get the pop. I think crude's kind of in the same camp here. So the 10-year after the FOMC minutes, we talked about this being very similar to gold. That kind of crossed back up into the profile and then using that DMZ 123.10, 123.20 as support on this. If we look into the daily, we kind of met the original targets or the initial targets, and we need to see a close above 124.13 to get real excited about this anymore. But you kind of got to look at the daily profile as regulating this down. I'm not excited about, you know, really having a long-term treasury trade on the long side here. So that's the way I'm looking at the 10-year. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Let's take a look at the 30-year. This is the weekly on the, this is incorporating the March contract. This is continuous contract on the 30-year Treasury. Okay, so kind of similar situation that happened actually a week early relative to what happened with the 10-year. And this week we've found 148, let's just call it 149 rounded off support here. A lot of times these things really do explore the entire fair auction once they start diving back into the profile. Here's the probably the initial target's 153.31, but man, it's just kind of concerning to try to go long treasuries right now. There's just too much overhanging weight on the rates going higher. Considering that Yellen, I mean, I think the rate market, if you want to call it that, has already kind of bounced back all the things that Yellen had buried. But I don't know if this trade's over, but we can have some retracements back up into some higher numbers on these treasuries. 153.31, or let's just call it 154, would be the targets on the 30-year right now. There's the long-term again at 149 area is a big number, support on the bottom. All right, so going down the list here, the VIX, we're going to take a look at, we're back down in 12 territory. So you had your bounce, you had your, 1463 top of the profile on the weekly hit. And, I just, the long term on the S&Ps, who knows what's going to happen, but I think in the short run we're just going to shoot for 20,000 on the Dow, and some people might be chasing that for a little while. So the VIX may actually go a little lower here. I still think it's a great long-term setup to try to do an option play on the VIX when it gets down into this 12 area. Basil might have some comments about that. I love to listen to his show. Let's take a look at silver really quick. All right, so we've kind of edged a little bit higher here on the March contract, but we've talked about what's the better trade here. Probably gold, and gold seemingly is kind of moving a little bit better than silver up here. I'm just kind of staying away from silver. Okay, let me read the DIN here. All right, so no new box. Why? What does that mean? On the 30-year, let's go back to the 30-year. Where am I missing this thing? Here we go. And let me go into the scanner really quick, and let me go to the futures section. This thing's so cool. Actually, we've got some really cool things coming up for this, so stay tuned. We're having a static chart and all the information and just kind of filling in the whole grid so you can click down stocks and, just like a real chart and package, see the charts as you kind of click down, find opportunities, click into the stock, see everything pretty quickly without having to click all these different buttons. Probably made a mistake in doing all these different buttons. So it'll all be like a static one-time grid, which I think will make this thing a little easier to use. All right, so there's the 30-year. So Here I don't know. There's no new box attempting to appear here, so I'm just showing in the scanner. We're still below price action. There's that 154 bottom of the profile on the daily, and again, there's that floor at let's just call it 149 that we just kind of used as support. Okay, gonna hit a couple of bellwethers here. Apple, this week, 114.82. We're just not showing that we want to get below there yet, but I'm just kind of watching this. I've actually got a little alert set up on it. If we can get a close below that, I think we could start looking at some lower prices on Apple. And Tesla, as David White has informed us, 30% short. And, they say what was this? What was the thing yesterday? They rolled out their first battery out of the Nevada plant, and then everybody gets squeezed. So 221.40, unfair highs on the daily. This is the weekly situation on Tesla. Yeah. Now it's kind of okay to be long, not okay to be short at all. I'm sorry, I typed in the wrong symbol here. ENDP. Okay, so this is one we were actually talking about yesterday, and in my opinion, still kind of in the noise area. We talked about that 1758 and 1758, the daily and the weekly. We did have a daily close a little higher than that yesterday, but just want to say that that is still quantified in the noise level for me. So I'm still not, out of this trade, particularly on the short side. A couple other things that we caught in the scanner. Let's see here. Uptrend reversals. You obviously had I'm mixed up here, guys. Hold on 2 seconds. Had a little bit of a pullback yesterday in the market itself, but I want to look at Humana. This is one we kind of looked at yesterday. And we talked about this particular sector and this, thing could possibly drifting back down into. Let me pull up our daily here. God, I don't know why this does this. It keeps changing on my charts here. Let me get this straight, so we have the right monikers up here. Jesus. Here we go. All right. So talked about Humana and talked about some targets on this one, 186. Still feel pretty strongly about this. So many things are up in the air when it comes to that whole sector right now. Let's take a look at the XLV. And as this thing kind of breaks out, you look at Humana as hey, it's kind of showing itself as the weak instrument in the sector. Keep your eye on it. I think 186 is definitely in order on Humana. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So we're taking a look at the yen. And if you've been watching the show, Joey and I got really super bullish on this thing around 103.5, and had talked about it ultimately going up to 125. It's going to have some backing and filling along the way, and it's not going to be just, the easiest thing in the world. But this has been relatively easy, and now we're back on support here around 116, which is, to be exact, about 115.89, 115.90. We've used that before. This is, again, you always try to buy breakouts in a situation like this, or buy support. You've got support here, and you've also got support at 114.24. So you can try it here. You can try it again a little bit lower. It's not the worst thing in the world to get stopped out of trades. Here's the weekly. As you can see, what these profiles do for me, we didn't look at this week at all, but this profile's been in force since the beginning of the week. And when you have these things and you kind of dive into these profiles, you've got to be looking to take something off the table, at least part of your trade, when you get into these stoppages or these things that start showing, hey, it might be time to take something off. So 118.66, 67. So we closed during the week last week, and then this profile appeared Sunday night or Monday morning, and then we touch it, and then you've got to be like, okay, I got to take something off. But right now, considering what I just said, we do have decent support to go long again. But remember, a lot of times these these things do explore the entire fair auction. So 111.67 is definitely possible. That would be the back the truck up situation, as somebody that then coined it perfectly a couple of times. But just saying that this 111.67.68 number is definitely possible. So remember the things that I said earlier about trying to catch support or buy breakouts. You've always got to be willing to put the stops in. And if this thing gets below 114.23.24, you could easily see another 300 pips down. So remember, this is kind of first support. This is kind of Custer's last stance here. And then you've got to just sit tight. Not a big fan of going short this product. So if you listen to what I was saying, you know I'm blocking out the short side. I'm only looking at ripe opportunities of taking profits or buying support or buying breakouts on this. All right. Let's take a look at the euro, the eternal short. Here's the long-term on the euro. We looked at this 105.85. 86 as the resistance area here. This is our weekly just kind of trailing down, and that's got a POC down below too, and that kind of lines up with this 105.43. So still looking at this as a shorting opportunity. I know we've gone lower recently. What was the low 2 days ago? 103.40. 103.40. So I know it looks like we're kind of compressing up into this area, but you know, again, still looking at turning the rents the same way on the euro. The next stop up, if this gets broken, would be a shorting opportunity around 108. So if you think we're going to pop here, and again, I'm trying to block out the short side, block out the long side on this one. It'd be a waiting game to explore the entire fair auction up into 108. Okay, so that's the two big numbers on the euro. Aussie dollar. Haven't been a huge fan of being short this, but you know, it kind of blocked out the longs when we started breaking below 73.56. So I don't really consider this a trade where you've got a lot of leverage right now, and in fact, you're just coming up into resistance again here. So I'm just passing on the Aussie dollar trade. Let's take a look at the Canadian dollar. We hadn't looked at that in a long time. So here's the situation on the Canadian dollar, and there's that trip to Quebec City that I missed back in last January. But as you can see, if you'll notice, like a lot of these inflection points are just powerful. So we're looking at 132.39 as support on the Canadian dollar. That means it gets devalued here as it goes higher. I like this trade a lot. This is a lot more attractive than looking at something like the Aussie dollar trade, which there really wasn't any clear, you know, good bang for your buck situations there. So the Aussie dollar, I like this a lot with stops below 132.39 based on your appetite for risk. Where's the yuan? There it is. Here we go. I think Joey had talked about this when we were on the show, like, you know, 697 is going to be the targets on this before they start doing some intervention. You know, we had profiles appear below price action twice here. This is our weekly view. Massive support, which, you know, that's very bullish. Massive support at 6.8105. So we talked about the targets up top. We've had a bullish scenario since then. Here's the daily, and here's kind of the, you know, if you're using the dailies to kind of regulate that weekly good trade up, you've got you know, I had a sign yesterday that that key reversal and then the close below profiles, and we've got the bottom falling out today. So hopefully these daily profiles can kind of regulate your long-term weekly stance on things. And right now, yeah, it's a pretty big move actually. So there's the close below profiles yesterday. All right, hit one more currency, if you don't mind. We're going to take a look at the British pound. Now, you know, unfortunately, I've been listening to a lot of fundamental rhetoric on this currency lately, and this is our weekly view, and this is what's This is our weekly view. I hope this is our weekly view. Yes, this is our weekly view. Sorry. All right, so you got 120.90 down below and 125.09 up top. You're right smack dab in the middle of the fair auction on the weekly, and here's the daily. So, what's happening right now in the British pound, in my opinion, the only way to trade this at this stage is to look at possibly, with the compression kind of pinching in the middle of the profiles, is to buy straddles or strangles on this and give yourself some room on it. Pick some dates a little bit far out and just wait for it to, I mean, a lot of folks are saying 110 on this. But, we could have a crazy pop the other way just to shake some people out of that trade. I think that's, the consensus of what's going on right now in the British pound amongst the talking heads. So it would be nice to have a straddle on or a strangle. So if that happens, you're going to catch it. But if we have that kind of violent move up before we move down, you actually could start unloading some calls and then have a free trade on when it comes to keeping the puts. So, there's a lot of different ways to trade that, but an option scenario might not be the worst thing in the world. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Take a look at Target here. Okay, so, this is a bad sign. I think David White was alluding to how much he loved brick and mortar retail sales type shops earlier. He's in love with them. I'm just kidding. 74 unfair lows, kind of closed below, rally back up into this on Target. I really think this is a decent shorting opportunity. The Dow 20,000 could kind of elevate everything, of course, but if we do have any kind of market pullback, these are the ones that are kind of showing themselves. This is our weekly, and I think you just got a cool situation here. The reason I am aware of it is because I just went in the scanner downtrend resistance. We looked at a lot of these yesterday and the day before because the market kind of elevating some dogs up into areas where you can hit them again is, I think Tom likes that concept, if I'm not mistaken. So this is going to put them right in your face and allow you to play defense and not let them get too, not let them get carried away on the north side when it comes to going against you, because you can orient stops around these defense points. So, and man, isn't it just, God, you go to all the trouble to have a store and a business, and then somebody just clicks on the Amazon button. And I was tempted to do that yesterday. I went to my local nutrition store, and the guy didn't have what I wanted. And I try to, just buy things when I can locally. And I was just tempted to go to Amazon and just get it. But, I realized I couldn't order steroids legally online. I'm just kidding. Anyway, just seeing if you're listening. Let's go back to the downtrend resistance stocks. Let's take a look at Facebook. Here we go. Always. Here we go. Facebook. All right. So, it's terrifying to short this stock when you just kind of look at what are the possibilities with it, and that's kind of been the case. This is our weekly here. But, this week you've had some decent little opportunities, and I know that the kind of staging of the weekly profiles, my God. Ooh. So it's actually the first profile 2 weeks ago that we've actually kind of not continued to go north with, as you can see. And then Navigator's actually crossing zero down here. So this is kind of a scary situation, but to try to pick the thing up on sale. But remember, a lot of times these things are fully explored. So even though we kind of broke the spine a little bit of Facebook for the first time in God knows when, got a little trading opportunity down here. But the reason it's on kind of downtrend resistance is because it's either the weekly or daily is going to predicate some type of resistance on a little bit of a pop here in a stock that, I think you're probably going to have more movement up back into that 123 on this stock on Facebook. So I'm kind of ignoring this, but you do have some initial resistance here around 119.5. But interesting how those profiles work. How about Russia? How about East Germany steroids? I heard that was, man, do you remember when they were in the Olympics back in the 70s? There were some crazy looking women in the Olympics for East Germany. Man, that was, all right. What are we looking at here? Apple. We looked at this earlier. I'll just revisit it. I don't like this as a long, it's got this 114.82. We got to get below and close below there to look at on the short side. I'm just not a big fan of going along this stock. I kind of like some of the things that David White was saying about it to make me feel better about my mindset on Apple. And, the margins are just going to continue to come down on this stock. And I think there's an exodus coming at some point. Let's take a look at the XLF. All right. So, talked about this one. Probably your targets 2387. That might coincide a little bit with the surpassing of the Dow 20,000. But as we look in some of the internals of the XLF, man, I've got the wrong glasses on. That's why I'm on the verge of feeling drunk this morning. Let me put the correct glasses on. I just realized that. Oh, wow. Here we go. So, JP Morgan talked about this yesterday, and just don't see any reason whatsoever to start shorting this thing, considering where the XLF is, until we start breaking and getting the close below 85.79. And then I think you got some validity and some people that might be leaving the stock for a while. This thing's had a heck of a run. Jamie Dimon's concepts are a tried and proven way to deal with problems. And, if it ain't broke, don't fix it. I don't want to short this stock till there's some technical reasons to do it. And, in the weekly and the daily, there's just nothing there. All right. So Citigroup, same situation. A little bit of a fake out a couple of days ago, but no harm done. You got to be able to kind of look at this in a sense. When you've got an opportunity, you got to try to take advantage of it. But this was more of a kind of a trailing stop on longs more than really kind of step on the gas pedal on shorts. It's easy to say that after the fact, though. Bank of America. Here we go. Kind of a similar situation as JP Morgan. Just kind of got to wait and see. And, I think wishful thinking on this would be 2055 if you're thinking about shorting it. But again, you've got to have some ways to play defense. Good old East Germany. I went to kind of right after that. I was in Lithuania. Man, it was really, really the Wild Wild West when that wall came down. And I couldn't believe how cheap it was. I mean, I think I exchanged, I want to say I gave them some dollars and ended up getting like 5,000 litas, which was their currency. And we were eating dinners with people with white gloves serving us and all the alcohol you could drink, and the 5-course meal for like $4. I said, how can it get any? I mean, it can't get any cheaper than this. So my friend there was going. He goes, well, where we go on vacation where it's even cheaper? Minsk. So I ended up going to Minsk to check it out in Belarus, which was a really bad idea. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. And I'm not really revisiting a lot of the things that we talk about a lot on the show, like just kind of throwing some things out from the scanner. Probably should. And, I'm hoping that you guys take some notes and kind of look at these things evolve as they are outputs out of the scanner and some of these custom sorts. But, Home Depot was on the list the other day for kind of uptrend support on there. And this is one of the reasons why we got down into this 133.89 area, and lo and behold, yesterday we just kind of popped right off of it. So these are meant to provide trading opportunities. Some of those custom sorts, it's just, it kind of saves the labor and, again, preserves mental capital. And having to kind of blow through a lot of charts and keep track of all these things in your minders and all that kind of jazz, just basically kind of put some things on the radar screen maybe you weren't even thinking about that are, again, in ripe opportunity profile type setups. Should we talk about Minsk again? Man, I'm telling you, I don't know if you guys caught the last segment, but I was asking the guys in Lithuania, it's like, how can it get any cheaper than this? Oh, we take vacations in Minsk. Oh, really? Okay, so let's drink more alcohol and go to Minsk, and that happened, and that was a really, really bad idea. It was a very dangerous place back then. I didn't think I was going to get back with my underwear left even. But and everybody was drinking. I mean, it's like the whole, man, wake up in the morning and start sipping on vodka. There's like no Planet Fitnesses there, if you know what I mean. I mean, so everybody's. Let's take a look at Coca-Cola. This is one really, really not interested in being long this stock. I think there's much more downside on this one. I think 4051 can be revisited easily. And let's take a look at Amazon, because these are some of the things that people are trying to trade here on a day trading basis. And, kind of like Facebook, I think you got a decent floor put in here now at 723.81. But, Trump coming to Trump could Trump could put a 200-point move down in this particular stock, and I think this little thing with him and Bezos, Bezos lost, basically. He lost, and he's going to pay. So you might want to look at Amazon from that straddle standpoint again, or the strangle standpoint again, and just put it in your portfolio. Don't look at it, and when it happens, man, you are retired, because that kind of move could happen in this stock. And if you're retired already, then you can send it in to the check. All right, international paper. Here we go. This has been one we got really close, and this is a favorite stock of mine, 52.35. I was too much of a, to actually step in ahead of time. I had the order resting about right there. But what is international paper looking at long term? I actually think we're going to kind of move around a little bit here. That was a trading opportunity, and I think massive support at 51.40 is in order. But the scanner, again, if you set these in your favorites list, you will be notified when these things happen. Thanks very much. Stay tuned for Larry, David, Tom, of course, Steve Rhodes, the rest of the gang, Basil, all day on TFNN.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.